Chatting now with Dr. Roelof Botha, the Altron FinTech Household Resilience Index. This is Q3 for 2024. Roelof, appreciate the early morning time. Let's start on a positive note, and that is that the private sector employment has increased and is actually finally at higher levels than before COVID. We've got the COVID jobs back, I suppose we can say, and whilst we still have chronic unemployment in South Africa, that is a good sign from the index, even if it's a small green shoot.
Yes, absolutely. I was thrilled when we finally managed to beef up employment creation in the third quarter of last year, because leading up to the third quarter, it was quite pathetic. And one of the main reasons for that, of course, is a restrictive monetary policy. We have the highest interest rates in the world, and it doesn't make any sense to me.
Absolutely. I want to come to that in a bit because, of course, we've got MPC later. Has remuneration followed? I mean, if we're seeing employment pick up, I mean, are we seeing more money being paid in remuneration as we see more people entering the workforce?
Yes, it has picked up, not quarter on quarter, but certainly year on year. There has been a marginal increase. And just on the side, it's also interesting to note that if you look at the average salaries that are earned by people that apply for mortgage for home loans, that took a nice upward. That started a nice upward trend a couple of quarters ago, and especially in the fourth quarter as well.
Are we the household debt costs, however, I mean, that is a percentage of income, that still remains very elevated. I mean, South Africans are indebted. To your point earlier, that debt is costing a lot of money.
Yes, when COVID hit us, obviously the central bank, as most central banks, I suppose all of them that are functional in the world, started lowering interest rates. And at one stage, households were sacrificing 6.7% of their disposable incomes to pay for debt costs, which is a fair amount. That's until the first quarter of 2022. But then the central banks all over the world, and they were severely criticized by several leading economists, including Joseph Stiglitz, a Nobel Economics Prize winner. I've been singing exactly, on the same storyline and chords when he said that why are they trying to fight an inflation problem which was caused more or less exclusively by a 700%. I'm going to repeat that, 700% increase in the cost in freight shipping charges. And just for the listeners, I just want to inform them that 80% of all tradable goods get shipped by the ocean, not by air. And that caused havoc with inflation all over. And it's interesting that South Africa's inflation rate, CPI, peaked at just above 7%, whereas it peaked at between 10 and 15% in most of our key trading partners. And one of the key reasons for that is that food, which is by far the largest single consumption expenditure item of people all over the globe, in South Africa is a huge net exporter of food. We should build a monument for our farmers, quite frankly. But that 6.7%, Simon, went up to 9.1%. And I did a quick calculation. Since the first quarter of 2022, when this started increasing, if it had stayed at 6.7%, and it could have stayed there if the rates hadn't gone sky high, then consumers would have had 200 billion rand, that's with a B, more to spend over this period. And that's the reason why the economy is not growing. It's not very complicated.
Yeah, and that number fits. We're chatting with Nwaba a moment ago, and he's talking around 50 billion from the two-pot, and here we're talking around a number that is 4x that size. We also see, I mean, Another massive squeeze is, of course, capacity utilization in the manufacturing sector. That is not yet back at pre-COVID levels, and that really does just tell a story. I mean, again, this is an economy that used to be a manufacturing hub around, I mean, particularly the mining industries.
Yes, Simon, I think you know this, but I just want to tell the listeners as well that I don't think they can fully understand my frustration with the Monetary Policy Committee, because what has happened
Hmm.
since they started raising rates is that your level of unutilized capacity in manufacturing, which is a huge sector, um, has just increased. So what happens here is that you are now spreading your fixed overhead costs over fewer units of production.
Hmm.
So what this means is that the restrict aggravating supply side inflation, cost push inflation. And my first year students understand this, but apparently the MPC don't understand this. It's as if they are anti growth. I don't understand this. Very frustrating.
And we are seeing real life. I mean, we've had we've had some I mean some green shoots over the course of the last year from consumers. But I mean, at the end of the day, the South African consumer, for myriads of reasons, some of them being massively high rates. I mean, our consumer remains severely under pressure. We have seen trading updates from a number of the local retailers. They are positive, yes, but they are single digit positive pretty much across the board.
Yes, it was very encouraging to see the November total retail trade data from Stats SA. So for the 3 months, September, October,
Hmm.
November in 2024, year on year, general dealers in real terms, the retail spending at general dealers was up by 9.4%. Uh, but and general dealers are 44% of the weighting. Uh, the data is slightly
Hmm.
misleading from the perspective of the different types of retailers, pharmaceuticals, textiles, furniture, hardware, etc. Because you can buy hardware, painting, and paint at general dealers as well, and you can buy textiles and clothing and footwear there as well. So, but that was very encouraging, and the furniture and appliances. Uh, that section, which is relatively small, 4.4% of the total, but as I said, some of that is also finds its way at general dealers. That was up 12%, double digit in real terms, year on year.
Hmm.
So
Hmm. Hmm.
there is definitely life in the economy. I like to believe that a lot of people have postponed, especially because of the two-pot system. They've decided, okay, I'm going to dip into this a little
Hmm.
bit because I do need a new car or a better second-hand car in my case. Uh, and then I'm going to have to work a little bit longer, which is good for the economy, quite frankly. But I mean, I just, the interest rate thing, if they can just lower rates a little bit quicker and a little bit more, with a larger, not this 25 Mickey Mouse stuff, 25 Mickey Mouse stuff. The economy is asking for that. We need we need to
Hmm.
unleash demand. It's there, it's latent, but we need to unleash that. And I don't know how we're going to get sense into those five members of the Monetary Policy Committee. I really don't know. In Afrikaans, ek wens ek kon 'n paar klappe gee. Sorry for sounding aggressive.
We hold thumbs for the 3 o'clock meeting. A last question. We had the Fed pause last night. Does that make sense to you? I mean, they did some aggressive cuts. Their rates obviously much lower, and their inflation has been edging higher away from their 2% target. Did the pause last night? Does that sort of fit fair enough?
Yes, I believe one needs to look at the real interest rate, and that's the U.S. Real interest rate.
Mm.
The benchmark commercial lending rates minus the CPI is acceptable. In South Africa's case, it's more than double that. If you take our real interest
Mm.
rate, it is currently, as we speak, Simon, 8.3%. This is frightening. When Jill Marcus, who became a colleague of mine at Gibbs, when she was the governor of the Reserve Bank, during her 5-year term of office, the average real prime rate, prime minus CPI, was 3.1%. And the economy, the South African economy, grew at 2.6% on average during those 5 years. Now, our real interest rate is 8.3%, the highest in the world, and the economy is not growing, hardly growing. Uh, I mean, what more does one have to do to convince these people that we need a real prime rate max of about 5% in this country? They are way behind. And if you look at the benchmark long-term interest rate in this country, the 10-year government bond yield, that has declined by 220 basis points. They've given us a measly 50. These guys are behind, and it's as if they are blind to this reality.
Yeah, and even if we, for the third quarter GDP, even if we remove the agriculture, which was a shocker number, our growth was, 0.4%, which is pretty much as close to zero. We'll leave it there, Dr. Roelof Botha. I always appreciate the early morning time.